So have that, just a minute. So write down there and say for the discontinued operations. Let's write something small. Yeah, Yvonne, I noticed that is why. So you say the main concern, the main concern is on how to determine, the gain stroke loss. How to determine the gain stroke loss. The gain stroke loss to be recognized. The gain stroke loss to be recognized by the parent company. To be recognized by the parent company. And by the group. Parent company and by the group. Full stop. Full stop. Down there, you say gain stroke loss. Gain stroke loss in the individual. Financial statements of the parent. How do you determine the gain stroke loss in the individual books of the parent? So to determine, disposal or discontinuation means you are selling off your shareholdings in the subsidiary. Unauza hiyo subsidiary. So when you sell the subsidiary, you are either selling it at a gain or you are selling it at a loss. So that loss or gain must be reported. And remember, the reporter here is the acquirer, and the acquirer is the parent company. So the parent company, in their own books, remember during the year, everyone prepares their own financial statements. So the parent will prepare their own books. Then at the end of the year, there will be consolidation. So the profit is normally determined in two ways. In the individual books of the parent, then we are going again to check how to determine that gain or loss in the consolidated books. So when you are told to determine, not even told, whenever there is disposal, it is either disposed at a gain or at a loss. So this is how you determine it. You take the proceeds proceeds on disposal, you less the percentage of investment, disposed, the percentage of investment disposed. Then whatever you get, it is said again, if the proceeds is more, then we talk of a gain. If the proceeds is less than what you are disposing, then we talk of a loss there. So it will depend. So have that. Very good. I hope you're done. All right, that is done. So you say gain, stroke loss to be reported in the consolidated statement of profit stroke loss. That way. So you tell us the proceeds on disposal, you add the fair value of net. I don't think here will be enough, so just allow me to delete it. Nipeleke huko juu. But you can write this one as I take it up there. So fair value of net assets retained. Net assets retained. So I will pick from down there. Then you less, so just proceed from where you are clicked here. Just proceed down there. Less unimpaired goodwill disposed. Bring the excess somewhere here. So somewhere here, see mwisho. So bring them here first. You also less the net assets. The net assets disposed. But if those goodwill and net assets minority were titled, then you will less fair value of NCI on the date of disposal. Yes. If they are interested in some part of those net assets, you will subtract. Then what you get is now what you subtract from the figure, which is here, so that you determine the gain or loss. So can you people check the differences between those two? We discuss. The next will be a question. We'll go to illustration straight. So check. Check the two. Class, now we can just straight go to illustration. December 2021. Question 1 is a very good illustration. December 2021. Question 1. Let's meet there. December 2021. Question 1. Open that question. So today for gender, who is going to read for us?
Enda nje huko. Kaa nje kwanza. Kaa nje kwanza huko naandika kitu hapo. Enda huko. Enda mchezo huko nje.
So mute Rioba, or allow me. No, I don't want to mute everyone because I want one of you to read for us. Last time, Moha was the one who read. Today, I want a lady volunteer. Let me see the ladies who are around to volunteer and read for us. So the ladies who are present, Brandy is there from top. Karen Perez, yuko hapo. Yvonne, can one lady volunteer? You can unmute and read for us that question. The December 2021 question number 1. So one lady to unmute, just volunteer. You know, ladies have a very good voice, so you should not fear reading. We'll be following keenly. 2021 kwa. Kwani karatasi yangu ina 2021? That is September. 2021 should be this one here. Yes, so I'm there. So who is reading among the ladies? Last time also another lady who read was Paris. So maybe considering on the arrangement from top, Brandy, you can read for us that question. Pole pole too. So let's listen as Brandy reads the question. So Brandy, there you go. Read the question. So what is Brandy saying? Brandy says where she is, she's not able. So the next after Brandy is Karen. Karen, can you unmute and read for us the question? Karen, are you around?
Mwalimu, hawa watu wanatuwestia time.
So who has unmuted? Rioba, that is you.
Yes,
Please read for us.
it's read. Pareto Limited is the holding company
Also,
of a listed group.
she excused, so it's okay. But Rioba, now proceed.
Pareto Limited is the holding company of a listed group of companies with its year ended 30th June 2021. Pareto Limited has made a number of acquisitions and a disposal of an investment. The following summarized draft statements of financial position relate to the group companies for the year ended 30th June 2021. So kuna hiyo financial statement, PP, investment in Pamba Limited, DAF Limited, current assets. We have a total current asset, equity and liabilities, equity, ordinary share premium, retained earnings, total equity. We have non-current liabilities, current liability, total equity and liabilities. Additional information. On 1st October 20th, 2020, Pareto Limited acquired an 80% equity interest in Pamba Limited when its retained earnings stood at 3,500 million. The purchase consideration comprised 1,250 million of Pareto Limited's shares with a nominal value of shillings 1 each and a market price of shillings 6.8 cents each. At acquisition of Pamba Limited, the only adjustment required to the identifiable net assets of Pamba Limited was for land, which had a carrying amount of shillings 625 million, less than its fair value. Second, the group policy is to measure the non-controlling interest at fair value. At the date of acquisition of Pamba Limited, the non-controlling interest had a fair value of shillings 2,125 million. Number 3, Pareto Limited had acquired 100% equity interest in Dafu Limited a number of years ago when its retained earnings amounted to shillings 1,750 million. At acquisition, the fair values of the identifiable net assets of Dafu Limited approximated their carrying values. The purchase consideration comprised cash amounting to shillings 5750 million. Number 4, Pareto Limited disposed of 60% of its investment in DAF Limited on 1st April 2021 for shillings 4,700 million, when the fair values of the identifiable net assets of DAF Limited were shillings 6,250 million. The fair value of the remaining 40% equity interest was shillings 4,300 million at disposal. Pareto Limited has not accounted for the disposal. Number 5, none of the companies had issued any shares since Pareto Limited acquired its shareholding in them. 6, neither the goodwill on acquisition of subsidiaries nor the investment in the associate had been impaired. Required. Goodwill arising on acquisition of the investments in subsidiary, gain or loss arising on disposal of the investment in DAF Limited as reported in Roman 1, the individual financial statement of Pareto Limited. Number 2, the consolidated statement of profit or loss. C, consolidated statement of financial position as 30th June 2021. Finish. Umepotea tena.
So, Rioba, that was very
Yes.
good. That was very good.
Thank you.
I hope everyone is satisfied with the reading. So, required goodwill arising on acquisition of the investments in the subsidiaries. Goodwill is computed on the date of acquisition. So the issue of disposal here, waliuza shares, for now just hold on. Just calculate the normal goodwill, the process of calculating goodwill. So let's have there a goodwill. So now what is happening here, the examiner is awarding us 4 marks. When goodwill is required, every posting you will make, will earn you a tick. So hata kama hiyo goodwill haitakuwa sawa, every posting. So that is why I always tell you this and master this. In exam, if the required goodwill is not part of the required, like in this case, we wachana your goodwill. Your goodwill inakuanga na some small issues. Itaku confuse to bure. So if it's not required, just leave it alone. 3 things to be left if not required: goodwill, retained earnings, and then CI. Hizo vitu wachana nazo, bado utapita. But now in class, we always show how to calculate them because they can be required. Like in this question is required. So if it's required, every entry leading to goodwill computation will be marked by the examiner. So after kama wewe you are anti goodwill, you know, there are people who they brand themselves anti some things. So even if you are anti goodwill, just make sure you know the process and the procedure for goodwill determination. So have here goodwill on acquisition. Goodwill on acquisition. So the examiner has said goodwill on acquisition of the investment in subsidiaries. So all of them. So to avoid time wastage, you bring all of them, Hamba and Pareto. Dafu, sorry, and Dafu. The 2 of them. Shillings, so this is limited. This is also Dafu limited. Shillings are in millions. Shillings are in millions. Shillings are in millions. So have that one there. So initially I was scared of how we are going to finish this question, because I told you why we have pushed the class to 4, because we have another class pressing at exactly 6. But the good thing, nimeona professor amesema is outside the country where there is no network. So it means my target will be achieved, and my target is to finish this question to the end. So once we are done with this, my target is perfect. So that class has just bounced like that, which is okay for us. So how do you calculate goodwill? You start with purchase consideration. Purchase consideration. Purchase consideration is the amount that the parent paid or amount payable to acquire. Amount paid or amount payable to acquire an investment. So now, check. I don't want to force figures on you. When you check when you check this question keenly, you will see them. I told you where to get these things. Either you go to the balance sheet under non-current assets, or you go to the additional information somewhere they might mention. So, in the under non-current assets, I want you to confirm for me something. You are seeing investment in Pamba. An investment in Pamba, they have given us 8,500. When Rioba was reading note 1, check additional information number 1. I just want to confirm. However, that is the figure you should pick. But I just want you to, assuming it was not given there, I've seen a question where our work here. So if that was not there, then check note 1. They said Pareto acquired 80% equity interest in Pamba. When its retained earnings stood at 35, the purchase consideration comprised 1250 million of Pareto Limited shares with a nominal value of shillings 1 each and a market price of 6.8. So where the examiner is denying you purchase consideration, what you do, you take the number of shares, you don't multiply with the par value or nominal value. You know, nominal value is the par value here. You multiply with the market value, then that is the cost of investment. So can you confirm for me, take that 1250 multiplied by 6.8, then you tell me whether it will give us the same figure which they gave us up there. So Silau has just confirmed. Thank you. Then the other one, Dafu, you can see there 5750 under non-current assets. So this is 5750. Have that, please. 5750. Then there was fair value of NCI. As you are reading, check note number 2. Note 2, the group's policy is to measure the non-controlling interest at fair value. At the date of acquisition of Pamba, the non-controlling interest had a fair value of 21.25. So fair value of the noisemakers. Noisemakers are the NCI. So this is 21.25. 21.25. There was no fair value of minority in Dafu. So you cannot force it like that. Therefore, the total purchase consideration, here we are talking of 10,625. The other side, we are talking of 5750. Then we less. So you can close this one, single here. We less the net assets. Less net assets acquired. Net assets acquired. You less the net assets acquired. So the net assets acquired. What are the net assets? Because I want to say net assets, like the other question we did. I want to mention the word net assets. Somebody, how do we go about it? Where the examiner is not straight to mention the net assets. How do we determine the net assets? Let me hear it from your side. How do we determine net assets during consolidation where the examiner has failed? Like here is not mentioning the word, the value of those net assets on the date of acquisition. So how do we determine the net assets? So thank you, Rioba. When net assets are not mentioned, then you pick the equity components. Equity are the ordinary share capital, share premium, retained earnings, and revaluation. So you bring ordinary share capital of that subsidiary. You bring their share premium if it's there. But retained earnings and revaluation, you go on the date of acquisition. You know, goodwill is computed on acquisition. Rarely will you find shares changing. In CR12, utapata shares ziko tu hapo. Directors ndio tuna change, but the number of shares are just constant. So, ordinary and share premiums, you pick them as per the balance sheet. But retained earnings, you know, profit keeps on you, mnasemanga, brought forward, carried forward, brought forward. Also revaluation, assets keeps on changing values. So for revaluation and retained earnings, check on the date of acquisition. But these two, even those two we pick on the date of acquisition, the problem, they don't change. So just go for the balance sheet one. Then you pull. So I hope that is clear. Aisha, who is joining now? Open that question. So let's go for those equity components. So ordinary share capital, ordinary share capital of those entities. We have 25. We have 2. Then share premium, we have 1.5. Then retained earnings, you check on the date of acquisition. Retained earnings, you check on the date of acquisition. So in note 1, we were told the retained earnings of that company was 35. Check to confirm in note 1. Then when Pareto acquired DAFU in note 3, you will realize retained earnings was 1750. Then when the question was being read, I was quick to see revaluation. So I want you to tell me, which note do I focus on as far as revaluation is concerned? Someone? Note 1? Correct. So land had a carrying amount of 625 less than its fair value. That is a revaluation gain. Less than fair value means the market value is more than the book value. And whenever the book value is more, it means the asset has been revalued. But when you check note 3, they say the carrying amount and the fair value are equivalent, meaning there is no revaluation. So these are the net assets. Can you add? Help me with the figures. When you say you can give me the two of them at the same time, I'll know the first one is this one and the second one is DAFU. So help me those two figures. So I want to see the two figures. Two figures is the addition of net assets. Only the net assets we are adding. Don't consider the 10. So I'm seeing we have a 76, 25. 76.25. If you have a contrary, I can see Sila was confirmed 42.50. So now, call this one here, the first one, let's call it A, and this is B. Therefore, goodwill will be the difference between A minus B. Here, the parent was having 80%, but I'm not taking 80% of net assets because it is full method. You have already considered NCI. This one was 100% acquired, so we cannot multiply by 100. So take A minus B, tell me the two goodwills, and we are done. We are done. So give me the values of the two goodwills. So thank you. I can see there goodwill 3,000 and 1,500. So this is 3,000. This is 1,500. And we get our 4 marks. So 4 marks will be I must be very honest. Honest is very good. Upper marks in Ananga image. 1, 2, 3. Then kuna you put here they don't mark these net assets one by one. You wanna mark you section 3. For serious people like you, they mark the total of the net assets. So that one and that one. And goodwill has no tick there. So 4, 1, 2, 3, 4, 5. Any four at 1. So those 5, any 4 correct entries will give you the whole marks. If you get 1, it is 1. Those which you can see are marked there. That is how that question should be marked. No question, we go to part B. So B has 2 sections. B has 2 sections. B has 2 sections. One, okay, B says gain or loss arising on disposal of investment in DAFU as reported in 1, the individual financial statements of Pareto, and 2, the consolidated statement of profit or loss. So we start with Roman 1. So B1, you say gain stroke loss, individual financial statements of Pareto, like that. So have that one there. So I'm giving you 30 seconds to check the format I gave you for determining gain or loss in the individual financial statement. Just peruse back. So you say proceeds on disposal. Proceeds on disposal is the amount we received. The amount we received when we disposed the subsidiary. The amount we received when we disposed the subsidiary. So which note should I check? Which additional information should I check for the disposal? Someone to tell me? Which note is this? To check the amount we received when we disposed the subsidiary. Note 4, Karen? So in note 4, Pareto Limited disposed of 60% of its investment in DAFU on 1st April, 4.47. So 47 is the proceeds. 47 is the proceeds. Then you less the investment you are disposing of. Ukiuza umepata 67. What is the value of what you have disposed? So less the percentage of investment or net assets disposed. What value have you disposed of? As simple as that. So initially, check from our goodwill computation, how much did the parent invest? How much did the parent invest in how much did the parent invest in DAFU? DAFU ni inauzwa. The investment in DAFU, wacha niwapeleke tu pole pole. How much was the investment in DAFU? How much was the investment in DAFU? Correct. DAFU, parent had invested 5750. Right now, they are selling off your kampuni wanauza, and they are selling 60%. You know your investment, Aisha, Brandy, Frederick, George, and others, your investment, even if it is 1 shilling, that is your 100% investment. That is what we have to appreciate. Hata kama umeinvest money 1 bob or 2 shillings, that is 100% investment. So they are invested 5750. Right now, they are disposing 60% of that 5750. So we need to check what is 60% of this 5750. You wakeuza wanapata 47. So if 47 is more than 60%, then we talk of again. If it is less, then the vice versa. So they disposed 60% of their investment. So what is 60% of 5750? 60% of 5750, 3450. So we are disposing an investment with a value of 34, then the receipt is 47. So we have gained by how much? So this is again gain of 1250. That one was to give us 2 marks. 1, 2, like that. Yoba, you have disposed 60% of 5750. So what is, okay, Amani, which illustration should I use? You bought a property, tuseme umenunua shamba. That is the investment. You bought this property at 5750, but you want to sell it. You are not selling the entire amount. You are only giving out 60% of that property. So 60% of that property is giving us an investment of 3450. So at break even, no profit, no loss, break even, we should be talking of 3450. But they received 47. So it means they gained. Are we in the same boat now? Yes, Mwalimu. They didn't find it. No, 70%. Tunavyoje wala alafu atapotea. There was a small disruption there. So that's okay. Roman 2, they want us to calculate the gain or loss, the way we go to the consolidated profit account. So gain, stock loss, consolidated P&L, consolidated P&L. Take seconds, peruse back the procedure I gave you. So you have read on your own, and you have seen the procedure. So the procedure is the same. You still start with the proceeds. Whether it is consolidated or individual, process is the same. So proceeds on disposal, 47. So you receive 47, then it's assumed that the value which you have retained, that is also another income on its own. What you never disposed, the fair value of the net assets retained. So you add fair value of net assets retained. Net assets retained. Net assets retained. So net assets retained in the same note 4, they say that they disposed 60% of investment in DAFU on 1st April for 47 million. When the fair value of the identifiable net assets of DAFU was 6250. That was the fair value of the net assets on the date of disposal. The fair value of the remaining 40% equity interest was 4,300. So whatever remained had a value of 43. So you sold 47, but you are also holding back 4,300. So in total, we are talking of 9. We are talking of 9 in total. So have that. Makasi, ulikuwa umepotelea hapo. Good. Then now, that is now what you have in total. The company is having what they never disposed plus what they have received. But now to know whether you gained or you lost, you need now to subtract what you gave out. Because this is what you have right now. You have the money plus you have what you never sold. But you have disposed your goodwill. Remember that? So you less unimpaired goodwill. Goodwill disposed. What is unimpaired goodwill? Unimpaired goodwill is goodwill which has not been subjected to impairment. Na imeenda. Tunaitanga good goodwill. Good goodwill is goodwill which has not been impaired. So I remember when we calculated the goodwill of Dafu, somewhere there we got 1,500. Just confirm. Have it somewhere here. Goodwill was 1,500. Then on the same date, there was net assets. This was their goodwill, but also there was net assets on that date. So net assets on the date of disposal. Nimeiona tu hapo sahi. The fair value of the net assets on the date of disposal, note 4, they said it was 6250. When they were selling, the value of their net assets was 6250. Then you less of these two, goodwill and assets, minority pia wanakuanga hapa ndani. But consolidation, we only consider the group, which is the parent here. So you subtract fair value of NCI on the date of disposal. But this one was 100% acquired. There was no minority in Dafu because Dafu parent acquired 100. Therefore, there is no minorities. Otherwise, if there were NCI, I need to check their value. So whatever you get here, bring it. That is going to be 7750. 7750. So how much? This again. So gain on disposal. How much? How much is the gain on disposal? Yes. Niko crash. Yes, yes. All right. So allow 50, allow what is mostly they are the same. What if goodwill was not impaired? Like in this case, goodwill was not impaired, allow. Goodwill was not impaired in this question. There was no impairment loss. So what if goodwill was impaired? Then we impair, then what remains? The unimpaired goodwill. In this question, the goodwill was not impaired. You know, unimpaired means, okay, in our question, there was no impairment loss. If there is impairment loss in a question, let's say they said goodwill was to be impaired by 10%, then at the point of computation, we could have reduced goodwill by 10%. So what remains is what we could have brought here. So now I hope we are in the same line. I hope we are in the same line. If yes, that is 2 marks, good. So 2 marks, they mark it this way. This is 1, 2, 3, 4. Any 2 at 1. Any 2 correct entries. Any 2 correct entries. Thank you. We are going to part C. But before we go to part C, I want us to analyze this question. You know, we have not done any analysis. So now I want us to analyze the question. I want us to analyze the question because if you don't analyze that question, you'll never put around visual result. So write for me there, group analysis. No, consolidation. Consolidation analysis. Correct. Consolidation analysis. Alright, so what is going to be the consolidation? Because when you get it wrong here, you will mess up the entire question. So this is how you start. You start by checking the financial year. And most, I advise you check when it is ending first. So the year is ending on 30th June 2021. So 30th June, when should it start? Check tomorrow. Tomorrow of this, 30th June, 1st July, backdate. So 1st July 2020. 1st July 2020. That is the financial year. Number 1, Pamba. Tuanze na Pamba. Let's start with Pamba. When was Pamba acquired? Pamba, note 1, on 1st October 2020. You see? It means at the start of the year, Pamba was not there. Pamba came in between. So, Pamba came somewhere here. 1st October 2020, Pamba. Pamba was acquired. Subsidiary, 80%. This is 80% subsidiary. Correct. Dafu is the one which was disposed. So Dafu, you check when it was disposed. When? So when we go to note 3, let's over here note 3, note 3 and 4, note 4. When you read note 4, Dafu disposed the investment in Dafu on 1st April 2021. 1st April, somewhere here. 1st April 2021. Dafu disposed. disposed 60%. There. Pamba acquired. This one was acquired. Pamba was acquired. Dafu was disposed. So you need to be very cautious. Otherwise, you will get everything wrong. You have to be very keen. So in this question, we were told to prepare statement of financial position. So, what if we were required to prepare P&L? How do we go about it? So, consolidated profit and loss account, P&L, would have been this way. In case it was supposed to be, it would have been Pareto. Please mute yourself. Fred, mute. So that is Pareto plus. How will we go about Pamba in the P&L, please? Somebody? P&L for Pamba. How do you think we should go about it? So I'll be forced to mute. Somebody to tell me, P&L, how will we consider Pamba? So now a portion percentage acquired with the number of months. This hour. How many months? We will apportion P&L for how many months? How many months are these? Brandy, 9. 9 is correct. Pamba was acquired here. So in the P&L, you check from this date going forward up to the end. From October to June next year is 9 months. So Pamba, 9/12. What about Dafu? How will I go about Dafu in P&L? Just check. How do we go about Dafu? Dafu for how many months or what happens? Somebody? I will wait until someone talks. Karen is saying 9/12. Anyone seconding her? Ryoba seconded what Karen said. And that is true. Dafu also 9/12. How? You know, here, we were having 100 from the start. Kutoka hapa tulikuwa na 100, you know 100 is a subsidiary. Rule 1, you only, yes, well, you only consolidate for a company if it is a subsidiary. So that was a subsidiary from here, 100%. Tukasonga back up. So from July to here, these are 9 months. Don't include April. Don't include April. 1st April means 31st March. So therefore, it was a subsidiary from the beginning to here. These 3 months, April to June is 3 months. Wengine wanasema 2. April to June is 3 months. These 3 months, it is an associate. We don't consolidate for associates. We only take their profit. So in the P&L, you say share of profit after tax in associate only. Immediately after gross profit, you check the profit of associates, then you take that percentage later. So for P&L, in case the examiner wanted profit and loss account, this is how you could have gone about it. But fortunately, it was not asked. It's good to know. What about the balance sheet? Consolidated statement of financial position. I want you to tell me. You tell me by saying this plus Evo. So you can say Pareto plus Papa plus Evo. So can you show me by typing how we should go about that balance sheet? And now that is the one we are interested in. So you need to get it right. So I can see Karen Pareto plus Palmer, Rioba Pareto plus Papa plus Duff. Anyone to separate those two people because they have different opinions? Silao Pareto plus Palmer, Yvonne Pareto plus Palmer. Rioba, you know, at the end of the year, balance sheet is prepared at the end of the year. At the end of the year, we only consolidate parent ni sure base. So parent, no negotiation. The remaining, you only bring a subsidiary. Associate and joint ventures don't qualify. So you check at the end of the year, DAFU is 40% associates. So you cannot bring associates here in the balance sheet. Associates, you only compute investment. In fact, that's going to be my working here. Working 1. You only bring investment in associate, period. Other items we don't consolidate. So here will only be Pareto plus Papa. Congratulations. So that was good. So you don't, and that's what the examiner is testing, nothing else. So if you make a mistake of adding all of them, Papa, Pareto, Papa, Dafu, kwisha wewe. That is actually that is the question. Hiyo tu umeona hapo, hiyo tumefanya hapo. This is the question, this one here. That you should know, Dafu will not go to the balance sheet. But if it was P&L, it goes for 9 months. That is the question. Hii upuzi mingi tunaenda kusoma hapo mbele, for lack of good word, let me say that. Hiyo SID, the question is here. This is the question. Hata kama unajua group style gani, but you cannot do this interpretation, you'll get it wrong. So me, I even tell a student, chukua 10 minutes to ensure you have 36 minutes to do a question. to be sure with this one here, ukishakuwa sure hapa, it will be easy. So it's not going to want this plus this plus this. It becomes easy. So the question is this section here. And I repeat, during consolidation, parent sure bets. Investees, it will depend. At the end of the year, ilikuwa what? Was it still a subsidiary? Yes, bring it. Did it go to associate or joint? No. Just calculate investment, leave out the other items. But P&L, your portion for the period it was. So P&L usiangalie mwisho. P&L, you know, is during the year. So you check for the period it was a subsidiary. That point made clear. So before we go to presentation, there are some workings now hapo inatusumbua bure. So I rather finish with them right now. So huko juu, goodwill tumeshafanya, investment in associate, because this one has become an associate. So I will check investment in associate, then we check retained earnings, then we check NCI. From there we can proceed to consolidation. So hard working one. Hard working one. So working one, I want us to determine investments. Investment in associates. That is DAFU. DAFU is the one which became an associate. It's called equity investments. So that is what I want us to determine, which is not going to be very hard. So you take the original cost of investment. So original cost of investment. Right, that way, the original cost of investment. So original cost of investment, you have to be very keen. You know, this DAFU, so associate here is DAFU. This DAFU, initially, it was a subsidiary. When we sold it, part of it is when it became associate. So you need to check, after selling it, what was the remaining value of investment? So that is what you have invested in that associate. Umeuza, ile imebaki ni ngapi? So what remains, ndio unaanza nayo as associate. So with that, which I was saying, can you check for me note 4? Tell me that figure. Which figure are we going to start with as an investment in associate? Whatever remained, how much? Correct, 43. I've seen it. The 40% equity interest, whatever remained is 4,300. Like that. Have that. I hope everyone sees the 43. And then you add, we normally say you add post-acquisition profit. But in this question, as I will show you, examiner is talking mostly of the value of the net assets. They don't want to come out clear on the profits. So if you talk of net assets, yeah, you know, when net assets meaning ordinary, share premium, retained earnings, in which case share premium and ordinary are not changing. What is changing is profit. So where the examiner anakusqueeze sana everything on net assets, just say you add post-acquisition net assets. Post-acquisition net assets, what will be changing is profit. So I want you to check this. I want you to check for me something. The net assets, we are checking the net assets, which are the equity components. Which are the equity components. On the date of disposal, that note 4, if you check keenly, the net assets had a value of 62. Yes, when the fair value of net assets was 62 here, when they were disposing, the fair value of net assets was 62.50. At the end of the year, check balance sheets. Check your balance sheets. Check your balance sheets. In your balance sheets, on the date of disposal, the total net assets, you talk of the equity. You talk of the equity components. But is this thing 62.50 or just wait? I'll check this. The total net assets here is 82.50. So associate, it became associate at this stage. So post-acquisition is what is due to them from here to there. That is what you need to appreciate. So it will be 40% of 82.50. And you know why I'm taking the total net asset? Ordinary, net asset up. Ordinary is not changing, premium is not changing. What is changing is the profit. So 82.50 minus 62.50. That is 2000. What do you get? What will you get after multiplying? Thank you, 800. So this is 800, giving us 51. If you go to the balance sheet, that is the only place you will see associates in the balance sheet. Good. Now, we are remaining with the two workings, retained earnings and NCI. Retained earnings is a very bulk. I'd rather we finish with the bulk, then we remain with this other one. So working 2, retained earnings. Retained earnings is also known as revenue reserve. Just in case. It is also known as the revenue reserve. So we start. You go and bring the retained earnings. So retained earnings of Pareto. Retained earnings of Pareto. Check balance sheet. Thank you so much. That is 78.25. I agree. Then this is now consolidated. We got somewhere gain on disposal. Gain on disposal, I remember we got 1250. Was it 1250 or 125? Whichever, but something close to that. Then for the companies, you bring now post-acquisition profits only. So you add post-acquisition profits. Post-acquisition profits. So you will allow me to start with Pamba. You'll allow me to start with the Pamba. So Pamba, post-acquisition, let's do small analysis for Pamba. Pamba was acquired here. So what was the profit on this date? Not one. The profit on that date, when we acquired Pamba, retained earnings stood at 35. When we are closing in the balance sheet, the end, the retained earnings, you can be able to see 52.50. Just check. The balance, you know, hapa mwisho inakuwa balance sheet. So in the balance sheet at the end of the year, 52.50. Here on acquisition, 35. So post-acquisition for the parent is from the date of acquisition towards the end. So Pamba, Mr. Parent will take 80 of 52.50 minus 35. What do you get? Thank you. 1400. Twende kwa dafu. Ya dafu niko na story mingi. We have to be very keen. Dafu, examiner alikataa kuongelea mambo ya profits. When examiner is trying to twist you with attacking kuongea profit, just go for the net assets. Net asset change in net assets is profit. Unless it's very rare conditions, because net assets are the equity. In equity, ordinary and share premium utapata zikiwa constant. So it means what is changing is profit. So in any question, not here only, anywhere, where someone is just talking of changes in net assets and they don't want to say profit, then the difference in net assets is always the profit itself. So for DAFU, examiner was very keen to lie on the side of net assets. So we are going to analyze the net assets. Check here. Date of acquisition. When DAFU was acquired, what was the net assets? You to calculate tukitafuta goodwill. Just go to goodwill computation from your goodwill. We calculated hawakusema but tulipata. What was the net assets on acquisition? Check where we computed goodwill. Where we computed goodwill. What was the total? Ile B, what manipulating B for DAFU. How much I can see Silau there? 42.50. So on acquisition, 42.50. On disposal, ndio hii tulikuwa tumeona hapa, note 4, 62.50. At the end, in the balance sheet, 82.50. Like that. So you know why I'm doing this? For this period, kutoka hapa, from here to here, the parent was entitled to 100% before disposal. They went and disposed 60, so this difference they take the 40%. You now have to this one here. So you have to separate when there is disposal. Hata ile step tulikuwa tunafanya hivyo, you separate the two. From here to here, they were entitled to 100, but for 9 months. Then for these 3 months, 40%. So it will be, so DAFU to separate. DAFU as a subsidiary. DAFU as a subsidiary. So when it was a subsidiary, we shall consider 100% of 62.50 minus 42.50. That is 2,000. Then Dafu as associate. I know someone might tell me, when you multiply na 9, you know this is 9 itself. Kutoka mpaka hapa ni 9, so you don't multiply. Unless una compare kutoka huku mpaka huku, which is, we are not doing that. So this one itself is 9. So Dafu as associate, hapo ni 40%. So 40 over 8250 minus 6250. That one gave us 800. Kwisha, we are done. So the total consolidated retained earnings will be how much, ladies and gentlemen? That's how we go about it. Give me the figure, then I'm so happy. Only NCI, then we are done. Presentation doesn't take me more than 10 minutes. So that one is very nice. Tunamaliza. Fill out 13,275. Someone else to confirm? You actually speaking of it. Yeah, so the figure has been confirmed, 13,275. Thank you. So we are doing NCI, then I give you 5 minutes break, then we come back for presentation, then we are done. I just leave you at that point. So let's do NCI, then I give you a small break. So working 3 is on equity. Equity of the noisemakers of NCI. Remember, NCI is only in Pamba. Hatuna NCI kwa Dafu. Hata haikuwa before, it was 100%. Even after disposal, is an associate. We don't have NCI in associate or joint venture. NCI only exists for subsidiary, the remaining percentage. So, in our very simple. Very simple. You come here and say, fair value on acquisition. So, on the date of acquisition, but to repair, fair value of minority we were given somewhere. Note number 2. The fair value was 21.25. Check you are not 2. Check you are not 2. Then you add what we call post-acquisition profits. The profit which Pamba made after acquisition Noisemakers will be going with the 20% because parent went with 80. And you can remember, we took the closing profit, which is 52.50, we subtracted the profit of the date of acquisition in note 1, which stood at 35. So this difference, minority will take 20% because parent is having 80. So take this minus this, give me 20%. Chap chap. So people are giving me 350, thank you. Therefore, what will go to the balance sheet will be 24.75. Question. So take a 5 minutes break. Let's meet, in fact, let's meet back at exactly 6. So those are 7 minutes break. Then we do the presentation of balance sheet. You can be checking what we have done. Then once we are done with that question, that will mark the end of the class. So just take that break. Aya, thank you. We are back. We are back for our presentation. So right there, Pareto group. So right there, Pareto group. Niliwaambia mimi niliwacha kupredict mtihani. But this disposal is very crucial for this city. So 30th June 2021. 3 years. Then we can have one column, shillings in millions. Nice. So non-current assets. Non-current assets, PP, property, plant, and equipment. So here we are only adding Pareto and Pamba. Mambo ya dafu tumemalizana. So this is 14,900 plus 9250 plus. There is something I want to add, but not dafu. What do you think this could be? There is something I want to add, but not dafu. What could this be? Someone? Thank you, Sila. Revaluation. There was revaluation in Pamba, not one. It was 625. Then you check if there was depreciation. Of course, there was no depreciation. But if at all there was depreciation, that is what you would have subtracted. So there was no depreciation. Add. How much will you get? How much will you get? You are getting 24,775. 24,775. Investment in Pamba Dafu. Pamba, you bring goodwill. You bring goodwill of Pamba. It was how much? How much was the goodwill of Pamba? Dafu imekuwa associate. We don't bring goodwill of associate. Associate, we bring investment. Thank you. 3,000. So this is 3. Then for Dafu, you bring investment. Investment in associates. Dafu. Working 1. So check working 1. How much did we get? Investment in associates. Investment in associates. 5,100, Aisha. 5,100. Good. Then financial assets. Financial assets, you add 31 plus 28. There is no adjustment. That is 59. 59. Question. Can you add for me the non-current assets figure? Thank you. 38,775. Then next, current assets. They just wrote it, current assets. So current assets will be 3850 plus 4425 plus, pick up kwanza, I'll tell you what to do. Just arrive there first. Aye. Read the last bit of note 4. The last bit of note 4. If you are with me, it says Pareto Limited has not accounted for the disposal. So, if they have not accounted for disposal, it means if they have not accounted for disposal, hata ile pesa walipata, the proceeds of 47 has not been accounted for. Na kwa hizo swali zote utaipata. So that proceeds, the 47 is cash, which should form part of current assets. So bring the 47 here, then indicate in your books. This one here, you indicate disposal proceeds, whichever name, hata utaandika na mother tongue, ni sawa, bora wewe utaelewa. This is the money we got when we disposed. So by the virtue of them saying that they have not accounted for, it means that cash has not been debited in the cash book, and that's why I'm adding it as part of current assets. Can you give me the value of current assets? The value of current assets. Current assets, people are getting 12,975. 12,975. Give me the total assets. Help me with the total assets. Total assets people are getting, so now 51,750. 51,750. If that is okay, equity and liabilities. By the way, I don't want very serious people. Let's just be jovial, relaxed. Just you think it was serious, but then these things are not very that hard. Ni rahisi. Una relax tu, then itakuwa tu sawa. Ukikuwa serious kabisa, you are very serious, nitakulemea. But just be normal. Si hii ni biashara tu. Kununua kampuni mwenyewe na kuinvest na hiyo. So it's just not something very serious. So equity and liabilities. Remember cash in note 3, somebody to check the cash in note 3. So ilikuwa purchase consideration. Purchase, hiyo 50, I know you are talking of 5750. Hiyo ilikuwa purchase consideration long time ago, hata tujui ilikuwa kwa in which year, hata tujui. That was, hiyo ni purchase consideration. What has not been accounted for, just 1 minute. Okay, hata shaelewa. Sawa. Yes, mwalimu. Unajua bado niko class, but I'm finishing in the next, kama ni mingi in 10 minutes. Okay, perfect. Okay. So ordinary share capital. Ordinary share capital, parent only. Ordinary and share premium, I told you the reasons. So nowadays we don't explain. 10. Share premium. 5. Retained earnings. Working 2. NCI working 3. So give me those two figures in that order. So retained earnings and NCI in that order. The two figures we are already okay. 13,275. And this other one, 24,75. So total of equity, give me that figure. Total of equity. Equity, the total of that will be how much? $30,750. Let me present it here. $30,750. Non-current liabilities. That's what was combined to. So 85 plus 6. There was no working there. So that is 14,500. 14,500. Current liabilities. Also, there is no problem. You just add 47,75 plus 17,25. What do you get for current liabilities? For current liabilities, what do you get? $65. Therefore, total equity and liabilities, can you confirm whether it is balancing with our total assets? Brandy, yes, it is. So that is 51,750. So that was to give us 12 marks. Where am I getting the 12? Here, 1, 2, 3, 5. They're exactly 12. So, how it will be. Students will get this without struggling. So they will get 1, 2, 3, 4, 4, 5. I know how students operate. When you watafikiria kidogo, atapata PP, They get PP and they will get this one here. Where is this current asset? Na hiyo ni nyinyi mnapata. So in the extreme, kama ni mbaya sana, you need the worst case for people. Anybody who knew that DAFU is out atapata 5/12. Mtu hata hataki stress, yeye kitu alijua DAFU is out of the equation. Mtu alijua DAFU is out na alikuja class vizuri, will get those things unaona nimeweka hapo. So you will get 7/12. 7/12 is not bad because I know from goodwill, the first one, goodwill, the way I know you here, and even I have no students. On the worst scenario, a student will get 2/4. I know the investment and fair value. By the time unaenda kwa mtihani, then on the B1, a student will comfortably get 1/2 because of the proceeds. And even the second one, worst case is 1/2 because of posting the proceeds. So there will be 1, 2, 4 plus 7. On the worst case scenario, a student getting 11/20, 11/20 in group is better. When they moderate, in case of moderation, this one here, they will say any 6 times 2. So if it's 6 for 2, you will end up here getting 12. You guys are up on 16. So it's very easy. The only thing you are supposed to know is the associate being left out. That is the most critical. Like if you come umeshapita vitu mingi, this is not the first thing you are doing in casting. That is something you need to master. That at the end of the year, we only consolidate for parent and subsidiaries, not associate, not joint venture in the balance sheet. Hiyo ukishajua umeshapita hiyo swali. Kama ni P&L, you only consider for the period it was a subsidiary. If it was a subsidiary then disposed, leave the side disposed, consider this period. So we are meeting tomorrow at or do you consider tomorrow we meet around the same time? Because we have been meeting at 6. Me, I don't think if I have any issue with tomorrow. You can tell me there, so I write the setting, November 2020. November 2020. I think that is question 2. And if you can get time to attempt, if you can get time to attempt, attempting asi kufanya hiyo swali, just analyze for me the question. Ukisha analyze watana nayo. Hiyo part of disposal. Provided you can tell me, mwalimu tukienda P&L, this is how we should go. Tukienda balance sheet, that one is enough for me. Because if you can get that, you are a passing group material. So you can just, if you don't have time, because time is limited, you some time limited because yesterday kuna class we were in the evening. Na mtu anatupea 12 questions which are very long at 9 p.m. Na tuambia your assignment must be submitted at 1:30 a.m. Saa 3 usiku nasema by 1 a.m. atumiwe 12 questions. So you don't know how people operate. So but you have to be human. So time is limited, but not to everyone. For those whose time are not limited, you can just try sketch. I will not ask you how, but what I will really be interested in is how you have analyzed. Analysis, we know how we analyze that it is this plus this minus this, not minus, this and this. We leave this, or just that one. That is the group, how we go about group at this stage. Otherwise, what do you think? Can we meet a little bit at 4 to songe mpaka around this time, up to 6:30, enough, or 6:30 to 8? Which one will you prefer? We can just have an agreement, then we are good to go. We have always had an agreement. Usikose kuongea ati watu watasema hey, mimi ndio nasemanga time. Just say if